Sarah, more green shoots from the ride-sharing company. It continues to be worse off year over year, but some sequential improvements. Revenue beat the street's forecast, $499.7 million versus $486.5 million, estimated a decline of 48% year over year, but quarter-over-quarter growth of 47%, loss per share of $1.46, adjusted net loss more than doubled from a year ago, adjusted EBITDA loss, that's its measure of profitability, that was $239.7 million, better than expected. Now, we are seeing weakness in shares. As Sarah just mentioned, it was up as much as nearly 3% right after the results, and as you can see, kind of going near the flat line right now. But shares are up 60%, guys, over the last week on vaccine hopes and that Prop 22 regulatory win. So it's possible that investors are taking some money out of this name at the moment because the results were good, but they're not that great. Active riders, 12.5 million versus 12 million estimated. And here it may also be a reason for some of the weakness. Revenue per active rider coming up a little short here, $39.94 versus $41.20. Logan Green, co-founder and CEO, says that they're encouraged by the ongoing recovery in ride sharing. Back over to you guys.
I know they don't have the Uber Eats business or the Eats business like Uber, which is helping cushion that blow. But how does it look, Deirdre, in comparison with Uber, who we also just heard from? I was just looking at that. So in Uber's quarter, they reported last week, of course, mobility bookings were down 53% year over year. So pretty similar, but they were up 94% from prior quarter. And that's just taking mobility, which is their ride sharing. However, Uber did miss on revenue estimates. And as you say, they are really looking like different businesses these days. Food delivery now takes up more than 50% of revenue. For Uber, also it's international. So Lyft, keep in mind too, will be more affected by rising costs. Not only in California, it gets a bigger percentage of its revenue from that state, but also if those sort of regulations go nationwide when they start to treat their drivers not as employees, but give them more benefits and protections.
Shepard Smith here. Thanks for watching CNBC on YouTube.